That I want to today show you guys exactly how to calculate a lot size, what your position size should be for a good risk management on your account so that you can further excel your gains on your portfolio. With that said, let's hop over to the computer and talk about it. So calculating a position size for a lot of people is found in different ways, and there's a lot of misconceptions surrounding it. In today's video, I really want to discuss exactly how to do it every single time, calculated, so you know exactly what you need to be entering. So first things first, I want to give you an example of what I see all the time in this industry. And comment down below on this YouTube video, just comment the number 1 if you've seen this before to let me know that you've seen this, but I think a lot of people have. There's a common misconception that per, say, $100, your lot should be, say, 1 micro, 0.01, or per, say, $1,000, your lot should be 0.10, or per $10,000, your lot should be, say a standard 1.00. This is a very common analogy and analysis that I see not only from traders but from educators, and it's baffling to me because this makes absolutely no sense with all due respect to the individuals saying it. The reason that I say this is that this is a very generic and broad synopsis. It has nothing to do with your stop loss. It has everything to do with just a standard level, but every single trade's different. Not every single trade, for most traders, end up with the same pip stop loss amount. For instance, not every trade has 10 pip stop loss. One trade has 10 pips, one trade's 50, one trade's 27, one trade's 32. Every trade's different. So in today's video, I want to show you guys exactly how you should be calculating. By the way, this is wrong. So please, if this has ever been taught to you, erase this out of your head, especially for the sake of today's video, so that you know for a fact you're doing it correctly. So let's now go over, let's just pretend we're going to make a trade idea up. Let's say we're going to buy this. This is euro dollar. I just want to pretend we're going to buy it. So let's just say, we like what we see. We want to buy it off this 50 EMA. We want to target back up into these highs, and we put our stop losses below this wick or something like that. So let's draw that out first and foremost. This will be your target. Let's say you target here, and then this is going to be your, say, stop loss level right about here. Okay, in this case, we'll turn the risk to red because you're looking to buy this, and of course, if you're buying it, you want things to go up. Okay, so we'll pretend all this is just as a scenario, and you guys will input your own signals. But every single time that you enter a trade, the first and foremost most important thing that you must know is your risk reward ratio. Pretend we forgot about the position size for a second. Your risk reward ratio must always be a minimum of a 1 to 2. I'll put a little annotation on screen now. I made a full video about this. Go check it up on my channel, how we can actually lose more than we win and still make money. And it's all to do with having a minimum of a 1 to 2 risk to reward ratio. Okay, so in this case, what that means is for every 1 pip you're risking, you're gaining at least 2 pips on a reward side. So in this case, we're risking right here. This is risking 4 pips for a reward of 10 pips. So we know for a fact, in this case, we know for a fact that we have a 1 to 2, because 4 pip risk for times, multiply that number by 2, 8, that's a 1 to 2 risk reward ratio. Well, this is 4 pips for a 10 pip reward. So we know for a fact that we're at a 1 to 2 risk reward ratio. So now let's move forward. Once you understand that concept, you're already halfway there or even more. Now we have to discuss, how do we calculate a level as far as a position size? And what we have to first do is figure out, okay, how many pips is our stop loss? So we're going to use this example again. For those of you guys that don't know how to count pips from looking at these values on the right side of the screen, you can also do what I just did, which is pretty easy. And it's grabbing your crosshairs here on MetaTrader 4. So I have my crosshair, I'm dancing it around screen. I come over to where my entry is at, and I click and drag to where I want to put my stop loss. Now I'm going to hold it here. I want you guys to read out loud in your own head as you're watching this video. There's 3 numbers at the bottom there. One says 10 on the left side, one says 40, one says 1.10683. Okay, you're going to forget everything except for the middle number. So that middle number says 40. Okay, that middle number says 40. So that means that we have a 4 pip stop loss. So the trick is just block out the last number, and what's left is your stop loss. So in this case, it says 40. You block out the last number, which is the 0. You're left with just a 4. If you're left with just a 4, that means your risk is 4 pips. Okay, so we'll use one short-term scalping example, then I'll switch time frames to a higher time frame and show you long-term. So this is 4 pips. So now what we're going to do is we're going to go over to this website, link in the description. This is my FX book. Okay, a lot of people use this for tracking their portfolios. We're going to use it today for a Forex calculator position size. Again, this can be found on Google, but I'm just going to put it in the link in the description there for you. So click that link, open it up with me now, and pretend your risk is 4 pips. Pretend your risk is 4 pips. Okay, the first things first, you must know the balance on your account. So the first thing to remember is people tend to use equity sometimes to find their risk. You want to always know what your balance is. Don't pay any attention to your equity. What is your balance at the time of entering the position? The first thing you're going to look at is your balance. Let's say, for instance, you're trading with an account that's got $1,124 in it, okay? That's your balance, okay? The next thing that you do is put the balance under account size. So in this example, we have $1,124, so we're going to put that into our account size. That's $1,124. Okay, the next thing you do, this says risk ratio, comma, percent sign. All this means is what percent are you risking on this trade? What percent is at risk if you lose this trade? For me, in that video I alluded to earlier, it's always 2% risk. It's always 2% risk. Some of you guys might put 1% risk. Some of you guys might put 2% risk. Some of you guys might put 3, 4, 5%. I would not recommend above 5%. 5% is ridiculously risky. And so what you want to do is set that amount. 1% for if you're really conservative, 5% if you're riskier than all get out. Like you're almost a gambler at that point. Okay, so you want to find that percentage, but the trick here is you must consistently use that same percentage. Don't do 1% on this one, but you're feeling good about the next trade and you do 4%. No, do 1% every time or do 2% every time. So for me, it's always 2%. So I'm going to put 2. The next thing we do is stop loss in pips. So we know based off what we just did in that last activity, which was looking at that middle number that said 40, we got rid of the 0, we have 4 pip stop loss. So we know for a fact that we have a 4 pip stop loss and we're on euro dollar. All we do is hit calculate. What it's going to spit out for you is that you're risking this amount. That's what you're risking. If you were to lose 2% of this account, that's how much money you would lose. But what you guys need to know is this bottom number. That is your actual position size. Okay? So going back to that, remembering back to that example that I drew at the beginning, I said to you guys, some people like to say, well, you do 0.10 per 1,000 in the account. Well, this is an example of 1,124. So if we were to be using that, we'd be using 0.10. We're risking way less than 2%. Okay? So in this example, again, you're risking 2%, $22.48, and your lot size is 5.5 minis, or 0.56 would be the lot size that you would put in. You always round this last number to the downside. Okay, I don't care if this says 0.69, you don't put 0.57. You put 0.56. Okay, you always round it to the downside. Okay, so that's an example of a scalp, and again, all you're going to do is put your own values. So let's erase all of this really quick, and let's go up to a daily time frame. Let's say you're a swing trader now, and you want to sell right here. Okay, so if you want to sell it right here, let's say that's going to be your risk, big risk. Okay, and you want your reward to be something like down to the lows, something like that. Again, we're just pretending right now, just for examples. So that'll be your reward. Okay, in this example now, again, you always have to measure. So this example we've got, okay, about 107 pips. And we've got a target of about 205 pips or so. Okay, just right on the line of a 1 to 2 risk reward ratio. You might want to chisel this down to make sure it's a 1 to 2, but you get the gist. So as we zoom in here, I want to make sure that you guys are clear on how to measure. Okay, let's say you're entering at price right now, which is this big gray line going across. Let's measure our stop loss to the top of the risk. So when I do that, what does that number read? It reads 1072. So at this point in time, you have to get rid of the last number out of those 4 numbers. 1072, get rid of the last number, you get rid of the 2, you're left with 107. That means your risk is 107 pips. So now all you have to do is move over to your risk calculator. Again, account size is 1,124, risk is 2%, stop loss is 107. So now we put 107, and at this point in time, look what happens. 0.02, same risk dollar amount, but 0.02, 2 micros. So think back again to that original example that people like to listen to. For every $1,000 in your account, you risk 0.10 or something like that. I just showed you how a different trade scenario would yield a different lot size. This is an example of a swing trade. 0.02 you'd be risking. 0.02, 2 micros. Whereas an example of a scalp, 0.56 you'd be risking in that case, right? And again, all of this is for you and your